So you didn't come here to watch me play Minecraft, but you read the title. It's been a very, very interesting trading week. Very interesting trading week. I learned how truly trading is a very, very, very high leverage industry, business model. Call it whatever you want. Very, very high leverage. You put a lot of work in the beginning. Once you can handle your trade psychology, well, everything from there becomes mechanical. Okay, sorry. I'll stop. let's get into the trade recap. We're going to do two trade recaps. We're going to do one from yesterday and one from today. Been learning a whole lot this week, and I actually want to take you guys into my mind. I'm probably going to make another video. It's going to be titled something else. Let's start off on yesterday's trade. What date was it yesterday? It was December 5th. December 5th, we ended up taking a slight loss, had the opportunity to set our stops to break even, and well, allow the trade to continue to play out. However, we did have our confluence understanding when the trade would be invalidated. Let's go on NQ. How did we get our bias yesterday, our short bias? Well, yesterday we ended up being short due to price action sweeping out the new all-time high on the hourly time frame. I don't really need to showcase the 4-hour, showcase the same thing, but you could see it right there. I wanted to see price action draw toward this 4-hour fair value gap we had formed, using it as a magnet for price action to, well, draw toward, like I just said. Going down to the 15-minute time frame, what happened? We came up, market open, well, pre-market, we came up, swept out this high, started consolidating a bit. Upon market open, what happened? Whole lot of chop. It was crazy. On the 5-minute time frame, we started to make a push to the downside, which we like to see. I realized we were starting to validate bearish confluence by failing to run that liquidity and instead sweep it. Once we showcased a new PD array to the downside, in this case this fair value gap, as well as this lower high, that was my confluence. Okay, we can look for a trade execution now. Had our limit set at this fair value gap right here, waited to see price action retrace into it, had our stops above this swing high, well, significant enough high. Price action came up, chop, chop, chop. Once it started to chop, we realized we were in not so good market conditions due to price action not moving as fast. You could typically tell when you're in good probable market conditions and when price action makes quick, sharp moves. When price action sits there and consolidates within drawdown, or sits there simply consolidates, when you're with an iffy price action. Um, you know, but didn't know that until we had taken this trade. Thought we were going to see a quick liquidation to the downside, and I thought this was simply the pre-market noise, I like to call it, until we actually open market open and then continue to move normal. Price action came up, consolidated, blah 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 blah. Eventually made a push to the downside. Here we were up around $770 at a 1.14 risk reward. Our target was this fair value gap right here. Typically we do target 1 to 2. Didn't set our stop loss exactly at break even. Why did we not do this when we had the opportunity to? Because we had this 1-minute fair value gap right here. But upon realizing the break structure back to the upside, we were able to actually slightly set our stop loss within this 1-minute imbalance, both seeing whether it would get validated and invalidated at the same time, still fully minimizing our risk on the trading day. Price action continued to make that move to the upside until it eventually liquidated to the downside. Cool, that's the first trade, that's the fifth. Let's go to today. Oh my gosh, look at ES. Going to MNQ. Bam, right here. This was today's trade, and I will show you the TradeZilla journal for both of them. Today's trade was very, very self-explanatory. If we go on the hourly, came down, swept out this daily low, this previous candle low. So that's how we got our bias of being bullish, not because price action was bullish. Price came down, swept out that previous daily low, began to push to the upside. What caused this push? Well, on the hourly time frame, we also came down and swept this hourly low, continuing price to the upside. Well within pre-market, more so London. Well, on the 15-minute time frame, same thing again. Began to form 15-minute PD arrays, higher lows, blah blah blah, swing highs and fair value gaps, all the good stuff. Instead of sweeping this hourly high like yesterday, we actually ran this liquidity. So we continued to the upside. That was our confidence that yes, we can continue higher. If I hide the chart right now, you could see right here, we ended up forming a 1 hour fair value gap. Going back to the 15-minute time frame, also formed a 15-minute fair value gap both here and here. Hopefully you didn't miss that one. Keep going down, scaling down to the 5-minute time frame. What happened? How did we get our trade idea in order to actually execute? Well, I originally wanted to see a retracement for this fair value gap we had formed market open. Didn't end up seeing that retracement until much later. Price action continued to the upside and ended up forming a 5-minute fair value gap right here. Now, I was originally going to execute on this 5-minute fair value gap, but did not. Why? Because I knew since we're at all-time highs, we had stronger potential to make a retracement rather than continue higher, especially not have made any oh my gosh. You're disrupting my YouTube video. Back to the chart. Now, what I wanted to see is us validate this, then form a new PD array. We would have executed on that second PD array being our confluence in order to continue higher. But we were also within this range on the 1-minute time frame. If I scale down and showcase you all right here, let me delete this. We were within this range right here, failing to validate any PD arrays, failing to validate bullish and both bearish, because we eventually invalidated it. That's how you know you're within improbable market conditions, when you fail to validate either side of the market. So I wanted to see us break out of this range, form a new fair value gap, then execute upon that. That would have been a clear entry. Price action failed to do that, made a liquidation to the downside. This was the breakout of the range we wanted to see. Essentially call it the sweep of the range. Call it whatever you want. Seen it perfectly. Bam, price action came down, took out that liquidity, validated this 15-minute. Now the chicken is, are you serious? Came down, validated this 15-minute fair value gap, and then that's when we look to see our trade execution. Scaling down to the 1-minute time frame, what happened? Well, we've seen a sharp turn model. We executed actually during the invalidation of this fair value gap right here. Usually we wouldn't do this. We would wait for the full invalidation, but we ended up forming our fair value gap, seeing the confluence to the upside, seeing that we had potential in order to continue bullish, also validating that 15-minute fair value gap. We assumed, you know what, I like what we see, and this was when we were playing Minecraft. We were playing Minecraft at this time. I wanted to see what new updates they had on Minecraft, so I decided, you know, why not open Minecraft, start looking around. I killed a few villagers, blew up a few jungle or desert temples, and there's a crow right outside, just okay, and then attacked some children in game, and then committed arson and did a lot of stuff in game. Price action came down, retraced into this 1-minute fair value gap, made a push to the upside. Once we've seen that push to the upside, we realized, okay, yes, I typically like to set my stop loss at break even once we're at 101. Set it at a little break even. I don't know, I was going to say a little bit in profit. Set it at break even, price action. And for anybody curious, why did I set my stop loss where I set it? Because we also had a lower 15-minute fair value gap right down here, meaning if I would have gotten stopped out, that would have been the validation that no, this was not the 15-minute fair value gap. I know we're on the 5-minute time frame. 15-minute fair value gap we were looking to validate, but instead we were looking to validate this lower one right here, not having it been that one, being the confluence that my stop loss was invalid, this trade idea was invalid. So once I seen price action make that push to the upside, I was expecting it to continue higher, because if we were to fully validate this 15-minute fair value gap, we would take out these highs as well, continuing higher. Once we hit our 1-on-1 risk reward ratio, set my stop loss at break even, and knew if we were to retrace back below this 1-minute low, taking it out, it would be the deeper retracement for this 15-minute fair value gap, which we were right about. Price action made that retracement, and now continuing to do blah blah blah. You can read my stuff right there. Pause and read that, and pause and read this, and then let's go to TradeZella. This was our news, by the way, today. Pause and read this. I'm not going to try to rush. I was going to rush it like under 10 minutes, but whatever. It could be like 11 minutes. This was blah, blah, blah. And then we're also going to do the trade recap on it as well. I have not done that yet. This is how price action developed. Daily time frame, you can see. Blah, blah, blah. pause, and if you're curious about it, I know no one's gonna pause and look at it or read it. But this is just how price action was developing. Like I said right here, not necessarily looking to execute, only would execute off a new PD array being formed outside of that range. I like this trade idea, blah blah blah. This was while I was playing Minecraft. Um, and yeah, so that was today's trade, and this was yesterday's trade. If I go right here, da, 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 da. Did I recap the short I took? Oh wait, I'm so okay. No, never mind. That was a different trade. This was yesterday's trade. Okay. Haven't even done that review either. I've only been watching Arcane and JJK and YouTube. It's bad. I need to find new hobbies. I know. This was a trade idea. Bam. You can pause and read everything. I know none of you are. Right here. And I trailed all my stops perfectly. So, just like that. There you go. Hope you guys were able to take something away from this. I am going to make a video explaining high leverage within trading, and once you master your trade psychology and you have a mechanical edge, you can simply do whatever, but I still advise that you actually put in the work in order to continue to improve within your trading, because I still am. I'm just doing it a different way now. Anyways, love you guys. Thanks for watching. Peace.